Hello, everyone. My name is Rana Beydoun, and I'm head of financial institutions at BLOM Bank. As a member of the BAFT MENA Council, I'm pleased to welcome you to this session on sustainability. This is part of a series of online events that the BAFT MENA Council and the Planning Committee are putting together. Sustainable finance is an extremely important topic to us, and we thought that this is a great place to start our series of events. Sustainability, in fact, outlines the way we conduct ourselves as banks and defines the impact that we have on our environment and society. It is an extremely important topic to us correspondent bankers and a key theme to BAFT. In fact, BAFT not only encourages environmental awareness, but also sustainable growth through its support of the youth, as evidenced by its Future Leaders program. The key question, however, is the following. Has the COVID-19 pandemic derailed our ambitions to make a better impact on our communities and environment? Keeping this question in mind, I'm pleased to introduce our panelists. First, joining us from London is Maria Mogilnaya. Maria is a principal banker at the Trade Facilitation program of the EBRD. The European Bank for Reconstruction and Development has been increasingly active in financing sustainable growth, not only in CEE countries, but also in the MENA region. Second, joining us from Jordan is Emile Cubeisy. Emile is the founder and CEO of Silicon Badia. This is a venture capital firm that focuses on impact investments, specifically in the Middle East region. They are known in the market as a group of risk takers and trendsetters, leveraging their resources and networks to help build a better future. And last but not least, joining us from Barclays in London is Marco DeBenedictis. We thank Barclays for their sponsorship of this event. Marco is the head of sustainable finance at Barclays, a desk formed in early 2020 to focus on the sustainable commitments that Barclays Group has made to the market, notably ambition to be a net zero bank by 2050 and to raise £100 billion of green financing by 2030. Marco has an extensive background in corporate banking and has spent 5 years originating transactions in the Middle East before returning to London. Marco, the floor is all yours. Having left the UAE in 2016, can you comment on the trajectory that sustainability has had in both the UK and the MENA region?
Hi there, Rana. Thank you very much, and I'm really looking forward to this interesting discussion. So yes, I left the UAE in early 2016, where life has been good and the region has been good to me from a professional and also from a personal perspective. However, it's really interesting to note that sustainability wasn't really on my radar when I left in 2016. So if you think about it, where I was and where we all are as people, like at some stage of your life, I mean, on a personal level, I didn't really know what the meaning of waste was. I was in a downtown apartment which had no facilities to recycle, and I used to play golf on the weekends on green fairways that really brought a new meaning to the word of or the words of spending more time in the sand than David Hasselhoff. And I guess, you know, the professional situation was also very interesting and changing too. So we were executing on a global corporate and financial institution strategy. However, we noticed in the market oil prices were low, around $30 per barrel, which is often a leading indicator of what is about to happen in the region. But also, I guess the other key thing is we have to think about where we were from a work-life integration, work-life balance point of view, where There was no working from home, or none to speak of in my institution and broadly across many parts of the region. And also this idea of an always-on culture. So I think it's really interesting to say that now, a lot of these things have actually changed. So me, like Mina as well, have been on a journey, accelerating both of our green agendas. I was being asked when I returned back to the UK to run the distribution, the portfolio distribution desk. I was being asked by investors to securitize, originate portfolios of ESG assets. And I still remember tapping and the sound of the key strikes on the keyboard as I was Googling what ESG actually meant. So a lot has changed in what is nearly 5 years, and I think the really interesting thing is the amount of importance and the amount of velocity that we're getting in this sector, and also it's a matrix because it spans across all of the other segments that we typically have. So I resolved to doing things personally and professionally in a slightly different way, and also making the change was a little bit more mindful. So not solely doing what was right on a personal basis, but why should this stop as soon as I walk into the office? I think that Mina is also taking a focus on sustainability, but we have to look at the current dynamics of what's happening with the pandemic. So it has affected the way we work. We've proven we can work from home effectively. So does this mean in the post-COVID world that things can change? Also, the region is full of a lot of family office money who are typically leaders in impact, social, and environmentally friendly investing. Does this really, the question comes up, does this really put Mina in a box seat to be really effective in sustainable finance in the future? So when we think about this, could Mina in itself hold all of the key ingredients to finding the Pareto frontier, the efficient frontier of people and profit? Do we need to compromise one thing for the other? Do we have to hold one in higher regard than the other? So I guess this brings us onto our theme, and before we get to our panel, I think I'd like to cover a few things. So this is the idea of this triple bottom line. So it's been around for quite some time, but as I mentioned just now, it's focused on people, planet, and profit. So company CEOs are revisiting their triple bottom lines. Some have already embarked on a very successful strategy, and others are still finding the way forward to go in this area. So I think we find that the world today is forcing enterprises to treat environmental responsibility in a reasonable fashion, and valuations are being affected if you do not have an eye on the future, or if you're not affecting the communities in which you operate in a positive manner. So as investors weigh up the company's sustainability impact, that is almost going through the same scrutiny than weighing up financial performance. We also see rating agencies acquiring many ESG-related agencies and third parties in this space. So just before we get on to the final bit, COVID-19. So just to contextualize a couple of points. So with the travel bans, lockdown, etc., this has led to the estimates on 2020 energy consumption to be 6% down on 2019. Now, 6% doesn't sound like an awful lot, but it is the size of India's annual energy consumption. Also, we have businesses that realize that there is potential to increase hours of working away from the office, which can lead to focus on smaller communities rather than the sprawling metropolises of London, New York, Paris, etc. And as we're in a very interesting place to sculpt what the future looks like. So with such numbers dialing into this call as well, I think it's really prevalent and interesting in the banking and investment community. And I would say that, the question to us as financiers, investors, or asset managers is, can we make profit with purpose to enhance our returns? Or is it merely just a zero-sum game? So on that point, I would like to open up and have a look at the first polling question that we have. So we are going to be running 4 polling questions during this. So the first one will be around what is the most important component of the company's bottom line. So hopefully you guys can all see that in screen. This is interactive, so if you guys can click through, then that would be excellent. And I'll give everyone maybe a couple of minutes just to respond that, just whilst I set the scene as to what we're going to be covering on these 3 pillars. So today we're going to be focusing on 3 things. So 1 is green lending, 2 is going to be the SME microfinance entrepreneurial lending, and thirdly we're going to be talking about financial inclusion and specifically gender. So at that point, I would like to open up and have a look at the, or just previously, just before we have a reveal of what that first panel said, I would really love to ask our panelists, Maria, and primarily first Emile, what do you think the answer to this first polling question is going to be? And I appreciate it's a really difficult question, but also how do you think our audience is going to respond? So Emile, can I go to you first on this one?
Sure. Look, first of all, thank you very much, Marco. It's a pleasure to be here, and thanks, BAFT, for organizing this, and thanks for all the participants that have joined today. I very, very much appreciate it. I think, looking at it from the vantage point of MENA, for me, I would probably guess that, emphasis would be on profit. I would tell you my response, though, would be on planet for one simple reason. I just think that when you're looking at it from the vantage point of the Middle East region, I think the environment is fundamentally an existential challenge. I mean, we have no water. Even though we're maybe, we're not net, horrific contributor, everybody can do much better, but we're not. I mean, our contribution, to environmental calamities is kind of like manageable to an extent. But I think the impact of the environment, of what's happening to the planet overall on this region is extreme. So I would say my answer would be planet. I would also add planet for another reason. I think if we look at the, what conflict has done in the region, what, the impact of migration in the region, and all of the challenges of the region, all the systemic challenges that the region faces today, I think if we took a step back and looked at it, we'd realize that actually, the single way we're going to survive this region is a healthier planet.
Excellent, thank you. That's a very, very interesting thought, because I guess, profit is nothing if the planet is not in a good space, so that you can spend some of those some of that shareholder wealth that's being created. And Maria, can I ask you to give your thoughts as well, please?
Yes, I will have to concur with Emile, and I'm wearing green today because I live and breathe green trade finance at the EBRD. I've been working in this field for the last 4 years, and of course, not only because it's my job, but I truly believe I wouldn't be doing this if I wouldn't believe that the planet is in danger, and we live in the time of the crisis emergency. So my answer would have been the planet. And as Emile said, in the MENA region, there is water scarcity, but in general, most of our resources are finite. And I think that especially during the current crisis, companies who were not able to source anymore the usual supplies that they could normally do, they are trying to find different ways and also to look into other ways to source materials. And there has been a lot of work in the circular economy space, and I really hope that this is something that will continue in the recovery from the crisis. But in terms of the audience, and because we also look at the pandemic and how we can sustain the development and create sustainable development in the post-pandemic world, I would think it's a people. And I think that the pandemic has really shown what can happen when the economies come to a complete stop. The rise in unemployment really showed that crises are dangerous. And as we come out of the pandemic, the climate crisis is still there to be tackled with. But what is also has shown, or we can see during the pandemic, is that the people, they rise and they come up with new ideas. There is a rise in innovation, and I think this shows the resilience of the private sector, but the private sector are people. So I would have hoped, even though we can see the results now, that the answer would be the people.
Excellent, thank you. So, and just going back, Emile, any surprises in terms of that, in terms of that result?
Probably not. I think, it just goes back to, I think all of us have the same, have an equal empathy to the planet, right? I think it's just a question of where we are in the curve. One of the blessings we have in the MENA region is that, we're such a young population. We haven't really built an infrastructure of success in terms of huge companies that are making a huge difference. So, we have the luxury of being able to look at the planet first and reverse engineering backwards. I think when you're looking at a global audience as you have today, it'll probably look at solving the same problem in a different way: profit first, moving to people, moving to planet. But I think ultimately our hearts are all in the same place.
Excellent, thank you. And as a proponent of the green team, I think it's a good time to get onto our first topic of green financing. So I guess I'd intro this with something that one of my favorite business school professors used to say, which is a child of love goes by many names. And now he was quite unique and somewhat eccentric, but we do find green financing being referred to, environmentally friendly, climate change related, or sustainability linked. And so we also find that this comes under a number of names too. So when we're covering this now, we're thinking about green finance as lending that aims to promote environmental sustainability by contributing to low carbon and or a climate resilient economy. And then I guess at this point, I'd hope to start to show the second polling question and make a few general observations. So, I mean, I guess I'd say that in light of C-19 pandemic and the question really is, have markets moved away from this idea of traditional lending and investments? Also moved away from sustainability to more traditional lending and investments, and has this skewed the idea of the triple bottom line? And are we focused much more on profit, or at least with surplus liquidity, is this the main thing that we're trying to drive now? And I would think that this kind of asks a question, and I'm going to go to Maria first. In light of sustainability being a flash in the pan. Is green financing, Maria, just a marketing gimmick?
Yeah, I can now I hope I can assume my answer, and the answer is absolutely not. And it might have been in the past, but it would have been a very expensive exercise, for example, for the EBRD to invest 35 billion euros in green financing over the last years for it just to be a publicity stunt. Of course, it's not. And I think that focus on sustainability and sustainable finance or green finance or climate finance, you're rightly saying it has many names, will continue. And it's no longer good to have. It's no longer something that would necessarily put you aside and differentiate you from others. It should become mainstream, and it's a must-have. And the recovery from the crisis will be green. Whether it's to do with green trade finance or green lending or green mortgages. And this is something that commercial banks will see more and more in terms of requests from their clients. The demand is coming very clearly from the consumers, from the corporates, from SMEs, but there is also a demand coming from the investors. The investors, the pension funds, for example, they want to know what are they investing in. They want to know that the investments will make good to the people and the planet. And even if companies are involved in high-intensity manufacturing sectors, for example, what they should do is try, if they cannot be 100% green, they should try to do no substantial harm, and they should really assess their practices. So the way how I see it, it will just grow, and banks have a very important role to play. Not only in satisfying the demand from their clients, but also from the point of creating new products and driving this as a business opportunity as well. There are a lot of opportunities for banks to come in at this time and to help their clients to become greener. Maybe let me give you an example, and I'm following a lot of companies to see, so that if I'm asked, I can give examples on this. But let's look, for example, at Zalando. Some people may know it's a German online fashion retailer, and their vision, and I really liked it. I wanted to say this because it really cuts through the topic of today's webinar. Their vision, and I'm sorry, I will read it to be precise, to be a sustainable fashion platform with a net positive impact for people and the planet. I didn't come up with it. This is their official vision. And you may not know, but all of their deliveries and operations, including returns, are already carbon neutral. They offset all the deliveries. They have committed to minimize waste and eliminate single-use plastics by 2023. But they have gone further than that. They have announced that from 2023, they will only work with those suppliers that will adhere to Zalando's strict sustainability requirements and science-based targets. And I think this is one of the examples of how larger companies not only do it because they want to feel good, but because they really care about the people and the planet, but they also bring all of their clients, all of their suppliers with them on this journey. And there is a huge potential for commercial banks in this area.
Mm-hmm. And that's very interesting, because if I could just carry on a little bit more that thread. So that flow of institutional money. So the idea of pension funds who are now deciding to
invest and divest away from set them to be. I think that the key thing to visit in this is really where you think the money will be flowing.
So the question, and where we would get to with that, is as the money flows from the institutional market, these are the main investors in banks. They have long investment horizons. And actually, when you think of a commercial bank and how they build their portfolios, which we'll go into in a little bit, you can actually see how this can really affect the way that the banks are lending. And so at this point, I guess, Maria, and just with that little bit of background, has the pandemic shifted or in fact revalidated? Because as we can see in the vote, it's pretty even. You know, how would you be looking at future businesses and what they should be looking at in the future?
We have seen in our work, so I work in the trade facilitation program, but also in the wider the EBRD's financing, we have seen a shift away from the green lending more into crisis response lending. For example, in the trade facilitation program, and I'm sure many banks who are listening to us today have also approached us in the last few months to support things that are critically needed, medical products or food commodities, essential food commodities, because there are food shortages in the countries where the EBRD invests. So of course, there is a shift, but I believe it's temporary, and it's temporary because there are calls for the recovery to be green. Not that we should restart the economy, full stop, but we should restart it as a green economy and try to move. And I live in London, work in London, and London has been really at the forefront of the climate action for a long time. And last week there was a report, the annual report of the UK Committee on Climate Change, which said that this is the point now. If we don't do this now, we miss the opportunity. And how sad and how unfortunate it can be that the pandemic has taken so many lives. We should use this as the point, the historic point to start the green recovery. And you mentioned earlier that we proved how successful we are in working from home, remote working. There are a lot of different things that happened during the lockdowns across the globe. And I think it gives really hope that people can adjust and people can take these new climate behaviors or climate positive behaviors forward. In terms of the sustainable lending, I think what will happen is that we will go away from the primarily environmental financing to a wider sustainable financing, which will also look into social justice aspects. If you look at the pandemic, and you see the figures and the reports have been published in the States and in the United States and here in the UK and in other regions as well, that these are the most vulnerable and disadvantaged groups are the ones that are affected by the crisis because they don't have access to healthcare, they don't have employment. And if we look about the climate change, it is a crisis. And it's no coincidence that those most vulnerable usually live in the areas with the highest pollution. And if you look at the climate change as a crisis, it really disproportionately affects people depending on where they live, where they work, what is their gender, what is their age, what is their race. And I think that this will need to be incorporated into any future initiatives, products, ideas when it comes to sustainable finance.
Thank you, and that's really valid. I guess the point is you get the double impact of improving the climate and economy, focusing on waste, all of this, and also the social impact that creates amongst the underserved, which is excellent as well. And Emile, if I can come to you now, please. So this green thing, you know, you tell me that's a pretty compelling argument. You tell me why it's not clever financiers putting together something new for their pitch books.
So look, I mean, I think the way that I think about it is when I'm looking at who's building the economy of the future here in the region, right? And I look at, you know, what value sets they've got built into themselves, from the beginning, from the idea stage, right? And I use as an example Swivel as an example, right? So here you have a company that 2 years ago. So Swivel is a microtransit a company based out of Egypt. Now it's operating in about 6 cities. And you look at 5 guys with an idea 2 years ago, and today they're doing 3+ million rides a month. Well, not in the last 2 months, but through to March. Running 3 million plus rides, 3 million plus passengers a month, and you think about their contribution as a microtransit startup, right, to the environment, and the efficiency they're bringing into public transport, using technology to optimize routes, to minimize a carbon footprint. All of these kinds of efforts coming into play, and then you take that's one company, one group of founders, and you multiply that across the region overall and what people are building. I would say that there's no longer a requirement for people, as much of a requirement for people to put that front and center into the message. I think fundamentally, if you're solving a problem in the region, you're probably solving typically a one of inclusion, so an economic problem, right? One of need, criticality, that you're solving. You're giving access to things that people had inefficiently accessed before, and more than likely, your footprint is contributing positively, right? Now the question is, how do we get more of this moving, right? And more of that culture, more of that spirit, more of these startups being, building out, right, to solve a lot of the problems that we have, while at the same time being more and more in control of contributing to the environment.
And I guess, and this is a good bridge into our second topic, but I guess there's also a characteristic of what the new balance sheets look like for sustainable businesses, because where lots of value from businesses, lots of the cash flows are coming from intangible assets, intellectual property, and items that you can't feel or touch, like a traditional balance sheet where it might have real estate or fixed assets. We actually find ourselves in a very interesting position as lenders. So if we now look into, and I'll come to you in 1 second, Emile, on this next topic of SME and microfinancing, because I know it's your area of expertise. If we could show the third polling question as well, then that would be great. So risk appetite of institutions towards micro SMEs and SMEs. So I just spending 2 secs talking about what Barclays' position is really with this, and as a fully integrated group and universal bank, we obviously are very committed to the SME and micro area. I think it's really interesting to note what key characteristics make players successful in such a space. So typically in this area, you have to have large, well-capitalized institutions, but the lending portfolio should be diverse. So typically that would mean hundreds, if not thousands, of lines of assets, highly granular, so very low in concentration, and good diversification across many different sectors, with no particular spikes in focused areas, for example, real estate or any areas like that, alternative investments. So internally, these structures, and we can go into capital reporting from a bank's perspective, but that's probably not one for today. But these internal structures will allow you to pick the region, the sector or asset class you decide to go deep into. And many sustainable businesses, as I've mentioned before, do not necessarily have these traditional balance sheets. So I guess the examples of businesses that we all know that are doing particularly well, even they don't necessarily have to be focused fully on sustainability. But as we see, the likes of Uber, WeWork, etc., have enormous valuations based off very little fixed assets. This is something as an institution that we have to address. Barclays are quite well integrated across this whole scheme, so you'll go to a different team, a different part of the bank, depending on whether you're a high growth entrepreneur or whether you are a large corporate looking for acquiring some form of sustainable supply chain, for example. But I guess the key thing that we've seen now in light of the outbreak, the coronavirus outbreak, is the government schemes. So Barclays have lent over £12 billion in related coronavirus schemes, with the ones most focused on this area being the coronavirus business interruption loan scheme, where we've lent to over 6,000 accounts, and the bounce back loan scheme, where we've lent to 69,000, nearly 70,000 accounts. So I guess that's a little intro before we go to Emile, and if we could just reveal the results of the polling question 3. I'd like to start, Emile. So Silicon Badia, what are you guys eyeing in terms of excellent sort of sectors or industries for potential future investments at the moment?
So it's a great question, Marco. I think right now our focus is really around resilient industries. So we're looking at, there's a lot of really interesting trends that are happening in the market today, and you expect them to happen for the coming 2 years. I think, first of all, it's remarkable to me that one of the interesting trends that's happening is that we're seeing an easing of government regulations, which is creating more and more opportunities for startups in the region, because government can't solve all the challenges that it's facing, right? It needs an all-hands-on-deck approach, and the all-hands-on-deck approach means creating more and more opportunity for startups across the region. So then the sectors come in, right? So be that in edtech and educational technology. There's absolutely no way that we're going to continue to learn the way we were learning before. I think there's going to be slowly over time a fundamental shift in how education is delivered across the region and across the world. And just using Jordan as an example, we went from an irrelevant number to 3.5 million students online within the span of a week because we had to. Health tech, so and access to probably, if we're looking at the impact that telemedicine is having, where it's actually patients are finding it a more personalized service than actual the visit itself. So you're seeing a lot of opportunity in widening inclusion to quality healthcare and all types of healthcare, right? So that's really, really interesting. I think a lot of stuff will happen there, which is really, really encouraging. I think, we remain humans at the end of the day. I think entertainment will continue to grow and thrive because people are going to, want to spend their time together, even if it's online. So you'll see a lot of continued, growth, within online education. And then everything that's related to supply chain. We're watching a complete transformation of, we've seen a complete transformation of how people are buying goods and services. We have to remember that this region is sitting on about a 1.4 trillion, if not higher, digitization opportunity. So beyond the resilient industries, I think we're still discovering what industries we can also, beyond those industries, we're still discovering what are the other resilient industries we need, because our generation was one that gave this region about 10 million problems to solve. And if I was a founder today, that's 10 million opportunities, right? There's a complete rewiring that needs to be done. We have the blessing of not having legacy industries and legacy weight to build off of. So as these regulations become simpler, I think, beyond those 3-4 verticals that I mentioned, we'll probably see, a lot more rise with equal kind of like veracity, or whatever the term is. Yeah, I hope that answered.
Excellent. Yeah, no, thank you. Very, very good. And I think I'll probably move to Maria on this one now. So really, how does EBRD think about financing micro and SMEs? And what do you think are the key success factors to operating well in this segment?
Marco, SMEs have been part of the mandate of the EBRD since the beginning, and we've been financing SMEs in different shapes and forms for the last 25 years. So of course, we have a lot of experience, but our experience is of a multilateral development bank. So there is a little bit different perspective that we have. We don't just look at an SME and decide, can we finance them or not. We need also develop a market. We need to develop also the appetite of local banks in the regions where we operate, so that hopefully there will be strong appetite to lend actively to this segment, and there would have been more answers to this polling question. But in general, what we have do, of course, we look at private sector. It's very important. We do have also public sector projects, but very often we combine them and we look at it in a cohesive manner, because private sector cannot thrive, for example, if there is not enough infrastructure, if there is no access to utilities, if there is no access to water. So that's why the EBRD has a holistic approach when it comes to a specific country or region. But the true purpose of our financing is really to develop a thriving private sector. How we work with SMEs, and we are aware of all the issues there are. You did mention about assets, that banks still lend based on asset-based lending rather than cash flow-based lending. And unless banks make a change and really let SMEs grow and work with them over time, there will be a hindrance for SMEs to grow, because you cannot grow unless they grow some assets or they acquire assets. What the EBRD does, we combine finance, know-how transfer, and also policy dialogue. And by policy dialogue, I mean that when we work with within a specific country or region, we work with the governments, with local governments, national governments, with different stakeholders to create a truly enabling environment, so that once we have done our work and we have set up a market for this, and we have provided know-how to banks as to how to assess SMEs, how to structure products for SMEs, how to look at SMEs. We may also provide some donor support, in the sense that we will share risk with local banks to start with, to encourage them to look at this segment. So once we have done this and we can step back and our job is done, it's very important that the market can work on its own. That's why the policy dialogue and the interventions with the governments and reforms, legal regulatory reforms, are very important. But what is also important is that we have developed, and we are unique in this sense in terms of the development banks, we have developed a dedicated program of know-how transfer to SMEs. And here you have been giving us some quotes today. I really love the following quote: "Give a man a fish and you feed him for a day. Teach a man how to fish and you feed him for life." I'm very sorry, the quote is referring to a man. It could also be a woman, it could be a you, so it could be anything. Unfortunately, it's a very gender biased quote, but the idea is that we work a lot with SMEs, and we also teach banks to work with SMEs, to help them with advice, to help them with industry expertise, so that they can grow. Because when you just provide financing, it's not enough. You need really to support the ecosystem development for SMEs to thrive.
Excellent, thank you. And I guess that comes up is, with a lot of bankers on the call and thinking about lending and commercial banks. Can I ask you, Maria, please, what do you see the role for commercial banks in the future in this space? What do you see them doing, or hurdles that they need to be, and hurdles and challenges that they need to be getting over?
I think, especially in the MENA region, really the financing based on collateral. So there is an issue with collateral. The banks need to find a way how to develop their own metrics to be able to look at SMEs when they don't have enough collateral, because that would be a breakthrough. And the EBRD is also looking into this and working with banks to develop and maybe to bring best practices into underwriting process whenever they look at SMEs. But banks should really also do their own research and find ways, and bankers who sell finance or trade finance should talk to the risk department and really find a solution to this bottleneck. The other area which will develop a lot and which will really help to include SMEs into the financing space is technology and digitalization. The more technology is being used, the more track record there will be about an SME. One of the hurdles that SMEs have, and banks when they want to go into this segment, is that there is not enough credit history. You may have a lot of information about investment grade corporates, but when it comes to SMEs, it's very rarely that there is a very robust system of recording the non-performing loans, repayments by SMEs, and so on. And that's where the EBRD is working with our regions. We are helping our regions to develop credit risk bureaus or any other institutions that would be able to collect such information that can be used by commercial banks to make informed decisions when they want to go into the SME or micro segment lending.
And thank you, because that's a really, really important point, particularly in the high growth companies, that you would see typically more view on management and a number of other items. So like I wanted to bridge to Emile here and say, you know, the role of commercial banks and how you, Silicon Badia, are working together with them. And also, I guess the other question would be is how when you don't have thousands and thousands of lines of loans and assets and investments, how can you manage to take a look at management and build a compelling case internally?
Yeah, sure, Marco. So for the first one, I think we should. I'm very mindful of the fact that banks are transforming. Like, we're in the midst of a major transformation, and I'm looking at this from a regional perspective, right? I mean, today when I look at the cap tables of our companies that we've invested into, we have banks there. When I look at like our products evolving, from financial institutions, they are. I mean, today we see, we've had our companies raise venture debt, we've had our companies raise conventional debt from banks, so even though they're startups. So you've had that, you're having that evolution move forward in a really, really interesting way. We have, 3 banks as LPs into our new up and coming fund. So on the local level, I think, the big shift that's happening internally is that leadership in banks have figured out that SMEs matter in a huge way and startups matter in a huge way. And from that point to happen, for it to disseminate across an institution, just takes a bit of time. And we're seeing that dissemination in full force. I mean, it's really interesting today when I meet the head of an SME business unit in a bank today, they can name more. They can name more startups than I can, right? Which is really, really encouraging. So on one level, on another level, so beyond the commercial side, which is just intriguing to me, they've been really, really active in supporting, entrepreneurship competitions and all, and just, building up the ecosystem, right? LPs with others as well, not just with us. So you're seeing this kind of activity come in and starting to happen. I think with the realization that these businesses are the SME. So startups today are the SMEs, of 10 years ago, essentially, right? I mean, they're the new businesses, they're the new manufacturing, it's custom manufacturing. So that's really, really exciting. And I just want to tip my hat to Maria as well, to EBRD, because, they're partners with us as well. And I've seen the impact that even small things, I call them small, like financially small, but not small by impact, like technical assistance has on companies. We had one of our companies called Eon Dental here in Jordan that leveraged an EBRD technical assistance to be able to build out an entire. I mean, took a little bit of money to build out an entire new business unit, and something where the entrepreneur would have been a little bit hesitant, right, to test something in that particular area, and it ended up paying off for them in a huge way. So I'm really encouraged by the ecosystem, and I think if COVID has done anything for us, is it's just brought it to a head much faster. I'll stop. Sorry, I talked too much.
No, excellent. I think it's something that we could all talk about for a long period of time. So I think it's really interesting, and as you say, the micros of today are the SMEs of the past, right? And they will be the SMEs of the future. as they look. The question is, how do you really pick the right ones, and what structures do you have in place internally to assess those things? So moving on to the third topic, which is around financial inclusion and gender. So the next polling question, if we could just display that, please, focusing on financial inclusion and female entrepreneurs. And I think my view on this is a very challenging question for the audience, really. Why? I guess because despite the success of financial innovations and social change and development, that it's still clear that a gap still exists for women, rural residents, and also underserved communities. And I guess for this reason, responsible financial institutions have forced a shift in traditional financial services paradigms in order to close these gender gaps and to support financial inclusion of the financially excluded individuals. So I guess when I think about this, the questions that typically come up for me is, are we doing enough? What can we do more? And really, is the idea of financial inclusion just a nice to have? Is it something for your corporate and sustainability report? So I guess question, if we reveal the questions, the answers to the poll, and then I go to Maria with this question, really. And I guess it's with the MENA region offering some of the lowest rates of financial inclusion. Does this mean that this is not relevant for the region?
It is relevant, but maybe we can call it financial exclusion. As you said, it's very low. The rates are very low. But if you think about it, this region can be really categorized by certain cultural customs and beliefs that are the reason for the initial exclusion. And if you think about it, it could be religion, it could be patriarchy, it could be the role of a man in a family, in a business, and these are all traditional beliefs. And this is something that has been building the foundation of what people believe in terms of the role of a woman in business or in enterprise, but also about inclusion of other underserved groups. For example, if we think about attitudes to disability or to also youth employment, Emile mentioned that the region is very young, and if you think about it, 40% of able workforce are usually either not employed or they employed but still live in poverty. And in this instance, of course, inclusion is very important, because if you think that women represent, say, 50%, 40%, it doesn't matter the exact figure, but if they represent a substantial part of the economy, then giving them access to finance and entrepreneurship really will create benefits for everyone. And whilst the rates of financial inclusion might be low in the MENA region, or what we call it Southern and Eastern Mediterranean, you may be surprised that it is in Turkey where we piloted our first women in business program. And it has grown to 18 countries, to over 30 banks, and we have financed over 60,000 women-led businesses. So I think that whilst the rates are low of the financial inclusion, there is a role for these countries to play. And what we have found is, in terms of, for example, youth employment, again, it was Egypt that decided to pioneer or pilot this program with the EBRD. So there is an interest, there is a demand, and I think that there is a real untapped potential, demographic potential in the region. And whilst commercial banks should really start looking at this, it is also important, and I may repeat myself, but I think it's very important, the role of the development institutions, whether it's the EBRD or other development banks or financial institutions, is really to have this dialogue with the government and to help them to do the reforms. Because if there are not, if the environment is not enabling for this, the banks will not start suddenly offer products for women or for youth, or really look into this segment. There should be really a move from the policymakers as well.
Excellent, thank you very much. So it seems that it's very much a collaboration between the market, all players in the market doing their best to increase the pie for everyone, right? It doesn't seem like it's in the stage of value capture at this moment in time. It's extending extending the value, increasing financial inclusion, and there's a number of market forces that I can see there that will come into effect. A question to Emile now, and I guess, what are Arab societies doing to help nurture this entrepreneurial spirit and inclusion across MENA?
I think from an ecosystem perspective, there's a lot going on, right? I think people have recognized, beyond a doubt, people have recognized the criticality of new ventures in solving the region's problems, in creating economic opportunity. It's not that we're one of the worst, as an example, in financial inclusion. We are the worst, and we can be the best. There's no reason why that can't be turned around, with a little bit of innovation and a whole lot of heart, right? These are not insurmountable challenges, and I think people are figuring that out. Even when it comes to any form of inclusion that we're talking about, I think the biggest challenge we've historically had, and one of the biggest challenges we've had in financial services in the region, is in product design. And I think that, we have an opportunity here to be able to design more resilient, more inclusive products. And I think that's what, all around us, with our impact fund, with what I'm seeing with others, from startups from accelerators to co-working spaces to even from a government policy side, people are trying and experimenting to figure out what can be done. I think, from a policy perspective, you're seeing more and more fund of funds emerge. You're seeing that are being really, really helpful. Jordan, we have one fund of funds, that was launched, that's been launched here, $100 million in partnership with the World Bank and the Central Bank of Jordan. These types of, we're seeing that across the region. Getting new alternative asset managers coming into the ecosystem that see things in a bit of a different way. Getting not just venture as a model, but looking at blended finance, looking at different types of instruments and models. I think the region has awoken to a need to do things differently. And I think right now we're at the an end of the experimentation phase and the start of a scale phase. When we started, venture investing in 2005, we were the first VC in the Arab world, or one of the first VCs, just in case somebody comes up from somewhere. But just, one of the first VCs in the region. And I look at it now, I think last year alone, we had over 120 new, institutional investors types, whether it's offices or firms, emerge and make transactions. So we've got exits happening. Things are really, really moving forward. The global economy is starting to look at the region as an untapped frontier. So I think all of that together is creating more confidence within policymakers and within the local established private sector to give us a break, to say, listen, let's make something happen. And there's money that's starting to trickle in, and I think the impact is starting to be felt. I will add one thing, Marco, is that we need to continue to create success stories. So we're still a long way from creating a track record of success. Kareem was fantastic, Soup was fantastic. These things are starting to happen. We need to continue to accelerate this curve of creating success stories in the region, and there's no question the money will follow because the case is there.
Excellent, thank you. And I guess just one more comment, one more line from each of you before we hand back to Rana for the Q&A. My question, Emile, what's the key opportunity for regions such as MENA? One sentence.
Wow, digitization. We're just so far behind.
Digitization. Excellent, thank you. And Maria, what do you think the key opportunity is?
I think I would say the people. The young population and innovation. It may link to digitalization or technology, but really the untapped potential is in the those groups, the groups of people that have not been maybe touched before, because the region is full of ideas, and there is a huge entrepreneurial spirit, and I think that's where the future is. It's very young. The region is very young, and this needs to be used to the betterment of the region and the economies.
Excellent, thank you, and thank you very much both. I'm just going to hand back now to Rana, who's going to administer the Q&A.
Thanks, Marco.
Thank you.
Thank you.
Thank you so much for this extremely engaging discussion. And it's clear that we have very interesting questions. I'll start with the first one. I think it should go to you, Marco. They're actually two because it seems that both have some regulatory component in them. The first one is how can regulators play a more important role in getting banks to be more active in the sustainability space? For example, tax benefits. The second question is the following. Performance of companies has largely been measured by financial ratios. What ratios should be integrated into financial statement analysis to measure social impact activities and sustainable initiatives? And please, Marco, bear in mind that you need to answer this from a global perspective, but also with some focus on the MENA region if possible.
Okay, so just some easy questions to start there. So the role of regulators and then potentially looking at KPIs that we could be using in sustainability. So keeping it brief, yes, the regulators have a key role. However, there is this interface between the benefits of the future, where the roles that the government have, the lobbying of different groups and trade bodies, and also I would say as well, you've got the role of multilateral development banks as well. So I think that I wouldn't point the finger necessarily at regulators and say that it's their role to change what we are doing. I think what we have to do is consider the fact that this is a new asset class that spans across a number of different areas. And what we have to do actually together, more than just the regulators, we come together with sources of data to help build the credentials and the proof that making a sustainable investment is actually allows you to achieve some sort of alpha above other equivalent projects. I think it's all too easy to say that regulate the amount of capital that we have to hold as banks or as institutions should be lowered, and there are things in place that are or being worked on to allow that. So I think it is quite key and very interesting that is, but it's not the role of purely regulators. It's also the role of all of us together and using trade associations and lobbying groups. Also, KPIs and the ways to look at new businesses. So firstly, I think that the key is to look at CSR reports. It's also to look at a number of the key areas that you will see in that business as being of high risk. So a retailer will have different potential environmental risks than something like an oil and gas producer. But the key thing, I guess, is to be monitoring that sustainability report that they're producing if they're a large company, having a look at who the third parties are or whether it's self-attestation that they're going through. So how are management looking at these processes? Are they employing a third party auditor with a small a to run this, or are they delivering this internally? This can be difficult depending on the size of the business as well. But I think the key thing is what is the business monitoring? What are they highlighting in their reports as key risks? And who is allowing them to create, or who is helping them create a yardstick by which they are measuring the good that they're doing? So, for example, having a power plant that is monitoring gender diversity at board level is good. However, there is probably a key metric there that you would hope that they would be looking at, which would be Scope 1, Scope 2, and Scope 3 emissions. So I guess it's really the importance of thinking about the asset class, thinking about what they should be focusing on, what the potential damage they could be doing, and how they're looking to improve those key metrics. That is what will be the closest parallel to the financial statements. But then there's also the broader S&G side of ESG as well, which would be around board places, non-execs, standard governance procedures like that, and also the impact that they're having on their community, and where they're choosing to operate and what good they're doing there as well. So that's probably how I would answer those questions. Anything I've missed on there, Rana?
Thank you so much, Marco. I have another question to Emile, and it's coming from your friend, our lovely co-chair. Her question is the following: Are you seeing more demand by investors to invest in MENA companies with sustainability as a core focus, or is this still evolving?
So it takes a troublemaker to ask a troublemaking question, right? So thank you for that question. It's actually really interesting because what I would say, how I would answer that question would be that I think it's really up to us as alternative kind of like asset managers, again, to reiterate the point, to design products that do that, and then to inspire investors to flow capital in that direction. I think, from what I've seen, investors in the region are open and amenable to products that make sense. I think we just need a greater diversity of products, and we need to be bolder in the products that we introduce. And we have to inspire confidence and belief and performance, right? In asset classes that address that. So the simple answer would be yes. I do think the appetite exists. No, I don't think there are enough storytellers that are telling the stories to channel more capital into this direction. Did I answer the question?
Thank you, Emile. I have one for Maria, and it comes also fantastically. Thank you. Thank you. We have a bit of a lag. I'm sorry, Emile. I have one for you, Maria. It comes from a lovely lady as well. She's the head of communications here with us at BLOM. Will the support be for COVID-affected economies and businesses, or will the priority remain sustainability?
I think that right now, and I can speak from the perspective of the EBRD, at the moment we are in the crisis response mode, and we have launched a specific pandemic package of financing, which includes also trade finance, for example. And this is really to help banks with the shortages in liquidity, but also so that they don't stop lending to SMEs. This is really an important element of what we call a solidarity package. If you may think why we call it like this, because we stand in solidarity with our countries of operations, with our regions, with our stakeholders, partners, clients, and shareholders. And it's very important, and transitioning to remote work for us was challenging to start with, but we still managed to deliver a huge pipeline of transactions, and we support as many clients as we can. We have seen a huge demand in trade finance, and here it really shifted to the support in critical medical products and essential food commodities. And we have seen a record month both in April and then another record in May, where in May, for example, we have supported over $500 million worth of trade finance. This was the single biggest month of our work since the establishment of the trade facilitation program in 1999. So, of course, at the moment, the EBRD's response is really much focused on ensuring that our economies where we invest can support themselves during the pandemic. But we are already starting to see some movements in terms of the recovery, and we are telling our regions, and this is what we want to see, is that the recovery will need to be green, which means that it will be sustainable financing going forward, and it's already part of our internal strategies or externally published strategies, where we say that this is temporary and we need to go back to the path of sustainable finance.
Thank you so much, Maria. We have a similar question on risk reduction coming from Aida Abdelkhaliq of BM. Also, I did not ignore it, but I believe that Maria has already answered this question just a minute ago. Interesting question. How quickly banks moving on?
Rana, I couldn't hear you. Was the question for me?
I think
Actually,
Rana's
it was
audio.
for Marco. Should I? I'm sorry.
Sorry, yeah, you cut out, Rana. Could you please repeat the question, please?
Oh, I'm gonna repeat it. It's the question is yours, Marco. How quickly do you see big banks moving on this agenda? Also, are banks setting targets based on what they see themselves achieving without really pushing for serious change?
So good question. So big banks and how their role that they're playing in this. So I think that the key thing is that all banks should be moving in which in the communities in which they choose to operate. I think that there are a lot of internal factors that are in play, and I think if you look at the largest business, whether they're on the S&P or FTSE or anything like that, there is a focus on green and sustainability. Even to such a point where some might even call it a hygiene factor, as if you're not looking at this and you're a large business, then actually, what really is management focusing on at this point in time? So the agenda definitely is building up pace. I think typically the larger institution, the more difficult it is to turn. However, we are definitely seeing, and Barclays, as I said, have made an announcement around our green financing goals, including capital markets and our own balance sheet, where we are saying that this is a key area that we are going to develop. So I guess the truth is that banks are already moving quickly. They are already staffing up appropriately, and they're already making key decisions in terms of limits, capital, and focusing on trying to add that layer of extra guidance and thoughts in terms of capital structure and appropriacy of key performance indicators, as I mentioned before, so that they can really assist the communities in which they choose to operate to develop quickly. So I think the reality is banks do move a little bit slower than the more agile institutions. However, I think the key part is that we have an excellent ecosystem and structure with very quick moving VC and private equity firms that can take advantage of moving trends. And also on the MDB, the Multilateral Development Bank side, we also see the effectiveness of their lobbying, governments and trade associations as well playing their role. But I think bringing that all together means that this change is now happening, and a lot of momentum has happened. So if you think about the idea of a container ship or something like that is moving very very steadily, as soon as it does turn, it does build momentum, but then that momentum is also very hard to stop as well. So I think it's relevant that a lot of banks have moved in this place. A lot of banks are appointing similar teams and focusing on sustainability. And I think the key thing is that once it starts going, then it will take quite some stopping. So it's an interesting place to be in.
Thank you so much, Marco. And with this positive note, I think we should conclude. I would like to thank you, Maria, Marco, and Emile, for this extremely engaging discussion. Other than the panelists, I would like also to thank the following for their contribution to this panel. Maram Al-Jaziri from Arab Bank and Kishore Kotian from Barclays. Arlene Sanchez from Barclays, and Sarah Naamani and Tala Nasrallah from the BLOM team. Thank you so much, everyone, for participating. Thank you.
Thank you so much.
Thank you. Thank you, Rana. Thank you, Marco. Thank you, everybody.
Thank you. Thank you. Thank you all.